Friday, June 6th, market analysis, Stan Ehrlich. Got a lot to talk about, a lot of crazy stuff going on. So I start out with stock market indexes, go to futures, and then I go to a few stocks. Tesla's one of them, and some other popular ones. So what have we got? Well, pretty much obviously because of some new news. I'm not going to go there. We have a slightly higher high on the E-mini, and it, at the moment, is not holding particularly well. We're back below the previous highs. Normally, usually, in a bull trend, if you make new highs, the market tends to stay up there, fiddle around a little, and start to go up again, and close relatively strong. Not too strong, not too quick, but bull markets stair-step their way upwards. Bear markets just collapse and break down pretty quickly. Not so much of the stair-stepping process. This is pulling back a little bit more than I would want if I was outright bullish, and I'm not. So if we close below the high of yesterday, which was a bearish engulfing, and it didn't work because we got a higher high today, we would have another somewhat bullish failure or follow-through failure. And I'm still telling you, I think this activity, even though it's a new high, and we're up a reasonable 5 full points here, pretty close to it at the moment, is in a very precarious position. I would not be totally surprised if this closed lower today than yesterday's close. I would not be completely surprised if it actually got below yesterday's low and closed below yesterday's low. Now, that's what I'm hoping and wishing for. And don't trade on hopes and wishes. That's losing analysis. But, it's a commentary on my part. And if it starts to do that kind of thing, that's a different story. So, not overbought. New highs, basically a second time now, since the market was overbought, and it did stop for a few days, and it did drop sharply. We have a higher high, didn't hold. We have a higher high, and so far at the moment, it's not down that much. But, the weaker it gets, the more I'm optimistic about my comments coming true. And I really have to have, in order to tell you, I told you so, so to speak, a close below 57.55. Then I'm feeling a lot happier about, obviously, the gap is very close. That'll get closed probably the same day or maybe next day. And I move down to some relatively significant support levels. And, I really can't throw out or eliminate lower. I'm just trying to pinpoint the beginning. And it's a little difficult with this trading range that's going sideways to slightly higher in the last 3 weeks. So that's my opinion on the E-mini, which is basically the opinion I have on all the other indexes. So we'll see if I can support that kind of commentary in the other indexes. So the 1-minute chart on the E-mini is what I show you next. Starting to come down somewhat, not particularly profound. I've got a couple of yellow lines here. There were alarms that I set. And I don't want them anymore. So close out those alarm lines. Good. Next chart. Spider. Holding up a little better. Does not have an overnight market. So I'm plotting only 6:30 to 1 o'clock California time, the traditional hours. Is at the previous highs yesterday and sitting around right there right now. So all it has to do is start to make some new lows, which is not very far away, and keep sinking. Then I'm going to be smiling more and more and more. Staying here or rallying more or making new highs for all of these indexes is going to throw a monkey wrench in my commentary and cause me to believe that we have a chance of actually testing the historic top of the market, tops December, January, February, for the most part, slightly different in the months for some other indexes. But, November through February, I think I was saying, or December. Yeah, that's about it, which represents at the moment still a lot of technical resistance. And we're seeing overbought conditions and seeing the market be very shy about follow through to the upside. And so right now I'm in limbo again. 1 minute chart doesn't look that bearish for the SPY at the moment. Next, QQQ. We had an actual bearish engulfing potential major sell signal yesterday on the Qs. And they were right smack at one of my significant resistance areas, correlating with some important highs during the topping out double top formation that was December and February. So this is now a potential, triple top, but they're rare. So it's only an observation. Much, much more important to me is the fact that we were overbought and had a bearish engulfing, and that's my ER sell signals. I remind you that many of these are important highs. There's a red. That green buy signal is almost at the very bottom. There's a red for a minor high, very profitable short term. The actual bottom to the day, April 7th. So these things can turn out to be a lot more profound than they look like at the time they happen. Period, underlined, italicized, boldface, fancy font, and a nice color. Don't forget it. Next. Starting to slip a little bit, not too much. Never made a higher high. Yesterday we had a day trade scalp, profit ER1 scalp. Small, but green, profitable. Better than a loss. We had a loss back here. So, next chart. Now, the NASDAQ futures. Same bearish engulfing ER sell signal, and we did not get higher than yesterday's high. That is the fail safe. If we touch one tick higher than yesterday's high, or a stop that may have been able to come down during the day yesterday and or today, and I'm not showing you that, I'm just telling you the fail safe for probably the next couple days is a tick above yesterday's high. I would never let it make a new high. If I got a sell signal, which I did, or I'm wrong. So far, that's a good signal, and this is just an opportunity to get into a higher level for a short sale. And ER3 does exactly that, and ER3 would be short around where we are right now. Next, 1 minute chart, coming down, about to make a new low for a few hours. Actually, since the opening, since the opening at 6:30 California time. So we're getting close to that low. Interesting, not that important. I really want it to come down a heck of a lot more. Next, YM stopped rallying almost exactly at the same high that it made on May 20th, almost to the tick, just a little tiny bit lower. So that is a short-term double top potential. Now, we're still higher on the day, but if it does what I'm hoping it'll do, it could get below yesterday's low, have a bearish engulfing with a double top formation in an area of resistance and almost divergence, not quite, but that would be great. That's exactly what I want, but I haven't got it yet, so don't jump the gun. 1 minute chart, YM, just like the rest of them, of course, starting to slip. We'll see what happens. Okay, the Russell popped up above resistance very slightly, also got extremely close to the high on May 12th. Possible double top. No reversal yet. It's just starting to slip a little. There's always the beginning of a move up or down, and that's the first tick, but discerning that that is the beginning to the damn tick is almost impossible. Okay, next. Slipping off on the Russell, looking good. Well, better in my opinion. Next, bonds. I did not expect to move down quite this big, but it doesn't do any damage to the situation. And the situation is that we have a double bottom from the low that we made on January 14th with a bullish engulfing ER buy signal to the exact low day. Now, you guys know I don't tell you this after the fact unless it happens after my recording, and then I talk about it the next day. But frequently, like I just did, I talk about it potentially happening if this does develop by the close of that day, like today. So, and I'm trying to get rid of some junk here. Oh, gosh, don't do that to me. Go away. Okay, good. So, I still like the long side. We've got two bullish engulfings during the bottoming process. We got oversold. It double bottomed out. And this is a fairly sizable double bottom. It's just not a month or maybe 2 months. It started on the first low way back in January. So that is basically 6 months, almost a full half a year. Not small. I would say at least medium to fairly large for double bottom formations. So yesterday was a new high on the rally. This double bottom really has to close above this high, which is a bearish engulfing on the top, which is 121.24-ish. Yeah, call it 121.25, round it up a little, 122. To be breaking out and going up a lot more. So there's a long way to go. So I don't want it to go down too much more. Frankly, none. Turn around ASAP and start to get above yesterday's high. How much lower can I allow it to go? Well, first of all, it's approaching my acceptable. But I can tell you that the formation would not be ruined even if we dribble off to, 110 something. But the key here is not going below 109.22, which is way down there. So if I was long here, I wouldn't wait for that. Let's just turn up real soon. Next, 10-year notes, pretty much the same story. A little bit weaker, a little bit faster, but really no change in the story. Energies, crude, breakout. It's still above the resistance area. It's still around the high of the day. Dog cough. And it's still above the previous rally highs. And it's staying there so far. If it continues to stay here or go up more, breakout. Right now, it's a breakout, but that could change. Hopefully it won't. Most of technical analysis is based on the close, traditionally, of a time frame, traditionally daily data. But, things have changed a lot since I learned this stuff in the 1970s, when we didn't even have the internet and we didn't even have software to do this. Everything was done by hand, and you learned your technical analysis from books mostly. All right. Looking very good. Definitely constructive. Now that the resistance area has been broken, I have to go bullish. Next stop, close the gap, 69.30. Next stop, maybe 71.16, and potentially beyond. This is quite a bit of time frame that was trading below the price we're at right now, making a new high since April 4th. So got April, May, June, 2 months. I like it. Next, we don't have much help from the natural gas, which frankly is now starting to bother me a lot. Remember, we've got this double shoulder, head and shoulder top formation I've talked about almost every day now for about a month, maybe a little less. And that I don't like. Minor new high for a week and a half. It's staying there. Looks like it's going to make new highs for the day. If this thing starts climbing more, I'm going to start to think about erasing the formation and canceling the head and shoulder idea. Support is support. Doesn't have to be a head and shoulder. I still will talk about support. And of course, support is starting at around 3.4 and reinforced around 3.434. So 3.4 at a hair higher. If that's broken, down, but not because of a head and shoulder, just simply breaking support. On the way up, we got a lot of resistance. Can't be too optimistic about that. We're closer to the breakout down than we are up. I'm going to turn stealthy, quiet at the moment on natural gas because there's too much room here. Not room here. There's too much ambiguity. Pass heating oil, a little more solid. Higher high by a chunk more, well above resistance areas, and I should have dragged this over quite a while ago, and that's about right. Good. So now we've overcome the resistance area that was stopping it last several days, and clearly so. So I think this is now able to get up to at least 2.17 and very possibly 2.250. After that, of course, higher and then higher. We have to feel out how it's working its way up. Too fast, too slow, any bullish or bearish activity, etc., etc. And I comment about those things day by day. So friendly, looking for a test of the next rally high, 2.17. Next, gold. Now it's still above the previous bear trend line, which seems to be above the high of a downward slanting channel. I've seen better channels, but it's close enough. Pardon me. So it's coming back to a little support, meaning the trend line, and that's not a static level. It changes. It's going down slightly every day. But as long as it's above that line, the concept is bounce off the line, turn back up again. So we're getting close to, hopefully, a turn back up again. And I'm allowing for a little bit lower to the line. And I'll drag it to the right a little bit more. And I'm friendly. I don't think all these other highs here constitute anything more than a rally in a bull trend and a minor downside reaction dip in the bull trend. Next comments. Silver, totally a new high ground again, but there's the difference. Today, we are still at that previous threshold. We are overbought again. That's dangerous. And yes, if it closes below where we're at right now, I've got to continue to say new highs, but they didn't stay a new high ground, especially above that particular price, which yesterday closed apparently right about there, almost exactly. So that was a little ambiguous. So we're in about the same situation at simply a little bit higher threshold. Lower, I'm getting more bearish by the tick. Higher, almost the exact same opposite, more bullish. Right at the threshold, right about now. Silver. What about platinum? Clearly, very bullish. Stopped at resistance yesterday at the high, pulled back a little bit, but did close above recent rally highs, way above them, except for the top that we saw back on May 20th, which was a bearish ER sell signal. Got the top there, got the top there, almost here, not quite, but, you know, made a little money. Got the almost the bottom here, pretty good. So let's see if I can get a bearish engulfing in the next few days. Then I'm going to scream bloody murder at another top, but I can't do that right now. All I can say is overbought, watch out, could stabilize, could pull back a little bit. I'm thinking that this support level at 1090, if we even get down there in the first place, could be pretty profound. We may just stay up here at above 1153 and keep going up. Next, copper. Got overbought yesterday, got above the resistance, closed back into the resistance area, and here we go. This is acting funny. I don't know why that's coming up. Okay, so I'm looking at resistance stopping the rallies in the resistance area that I've had sitting here for a long time. It's working, and when it's working, it's working. So I'm looking at copper to go back down to lower levels. Now, I'm well aware of the government thinking about stopping printing, or they're going to stop printing the penny. Fine and dandy. But that's it. That's fundamental information that's slow to have happen and well known in advance. So it really doesn't have a lot of effect instantly or quickly or suddenly. It'll blend into the price action over time, which sounds to me like it's bearish, but we don't see that yet. I'm a little bearish because the overbought condition and the resistance area is stopping it. So I'm looking for maybe a pullback down to 4.4 again. Next, I'm looking at soybeans, oil, meal. Beans need to close above 1081 to get my attention. It's stuck between a rock and a hard spot. Needs to close below 1032 to get my bearish attention. In the meantime, it's just bouncing back and forth like a ping pong ball. Soybean oil, almost the same thing. Tried to break out of a bottom formation, failed miserably the next day. Came down, and by the way, when I say something failed miserably, it does not mean you took a big loss. You guys got to be crazy to be risking large amounts of money on any trade, in my opinion. From my standpoint, it means you don't get in very accurately. And that's one of my expertise, is entering trades very close to tops and bottoms. This resistance stopped the rally this morning. We're sitting pretty much right at that level. I think it's going to roll over and slip right back down. Not oversold anymore. Bear trend at the moment over the last month or so. The bigger picture is pretty much flat, but I do have to point out that you were making lower lows, lower lows, lower lows, lower lows, lower lows. But back in August and September of last year, after that, you started making higher lows, and that's creating a bull trend line. So do we have a large rounding bottom? Maybe. But it's so big, I don't have anything to go on today. I'm looking for it to go down and slip slowly and test previous lows at 45.75 and probably drop off to 44.70. Next, soybean meal, nothing. Sideways like crazy for close to 2 months, a month and a half. Boring. I need a close above 300 to get friendly, and not necessarily bullish, but at least start to expect a little more strength. Then it depends upon how much strength we get as to whether it turns into something long-term bullish. Right now, can't justify it at all. And frankly, I think it's about to do what oil could do, slip off and make new lows. Corn, it's already slipped off and made new lows in the last few days after getting up to resistance approximately, not very accurately, but it still did it. Oversold conditions imply maybe another bounce, 450, 460, and then down. Can't help it. I got nothing to go here. I got nothing to tell you looks super bullish. It doesn't, to me. Next, wheat pretty much in the same territory, but at least we got a little strength here. We got a new high for a week and a half, but it's right up against the high a week and a half ago. Now, resistance area also. 2 strikes against it, but I think we've got a bullish engulfing going here. Let me see. Yesterday's low was 40.50, and today's low is 40.25. Yep, 1 tick lower than yesterday's low does make a lower low, clearly above yesterday's high, so it's an outside up day bullish engulfing. Not overbought, but getting a little close. I think we probably will move up a little bit into new high ground, maybe for the last 2 months, and bump against this resistance at 566. This looks modestly friendly only because of the bullish engulfing developing. If we slip and close lower on the day, it's exactly the opposite. Resistance will have stopped it. It would have had, but it's not there yet, a bearish engulfing. Right now it's bullish because the engulfing you cannot change. It's a close that hasn't happened yet. So momentarily, if the close stays higher, I'm a little bit friendly, but I think there's better places to be trading. Much stronger upside breakout cattle, but we have an upside exhaustion gap potential. We have overbought conditions that are not too high yet, but 80. I'm, opening one eyeball at least. If I get to 90 or higher, then I'm screaming bloody murder. The market's about to turn down. We're not there yet. But I do think overbought conditions with a gap to close at lower levels, and you're going to see Tesla here in a minute, is going to do the trick, and we're going to slip down. Next, we're starting the hogs, overbought, pretty much the same commentary, up a little bit more maybe, then come back to support. Now, Shell. Up a little, no big deal. Kind of sideways the last 3.5 days. Gap to close underneath. Don't forget it. Also, there's a gap down here, 63.45. Don't forget that. So although the trend is up mildly, we are in an area of resistance, and there are gap to close above. So we're getting pulled by the gap above, and we're getting maybe pulled down by the gaps below, but that hasn't started. So are we going to close the gaps above first and then come down to the ones below? I think there's a good chance of that, but I'm not very certain about this. You don't see this situation very often. Kind of be pulled between a rock and a hard, pulled a gravitational pull in both damn directions. You're getting stretched out. Okay. So not quite sure about Shell at the moment. Next, we've got Apple. No new high. Still higher on the day. Bear trend lines apparently is having some resistance effect. Not very accurately at the moment. Support below the market. If we start closing below 193.30, it'll probably break down all the way to 70 or lower. But in the meantime, a minor little uptrend after oversold, after support passed the test. I got to be a little neutral here also. I can't come up with any emphatic statement about my personal opinion expectations. Tesla closed the gap. I told you there was a little tiny gap here yesterday, and because of the obvious, now not so friendly friendship, the stock crashed quickly. No surprise. Closed the gap, told you in advance. There's nothing wrong with it going all the way down here also at 242. I think that's not out of the question. It did get oversold on that big move down, and it gapped down a little yesterday. So what do you think? Up, close the gap, turn down again to new lows. Or just keep sliding to close this gap. So obviously I'm looking for the gap below the market to get closed, whether there is a short-term bounce or not. Next. Carvana. Uh-oh. We almost have a bearish engulfing ER sell signal I've been waiting for. Put your new short sell stop a tick below yesterday's low, in my opinion. I don't want to be recommending specific exact trades, Mr. Government. That would not be a good idea. But that would be my opinion. That's what some of my strategies tend to do. Okay. And I am looking for, after this new high in overbought conditions, a bearish engulfing ER sell signal. Now, the low yesterday was 338 and 51 cents. Today's low so far is 339 and 17 cents. A move down of about 70 cents on a $339 stock is a very small move. So it could happen very quickly. Watch out. I may be coming back to you on Monday morning, showing you a bearish engulfing ER sell signal on the top of the market in Carvana. Maybe. Okay, let's go look at E-mini. Still up there, still hanging on, but we have made minor new lows since I started talking about other things besides the indexes. Good. So, another bounce, another new low, again and again before the close today would be exactly what I want. You guys have a great day and profitable trading to you. See you next Monday.